Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar surges further overnight and now challenges the 60-day moving average seen around 66.4045 as the US dollar index, which measures the greenback strength against a basket of six major currencies, fell from 103.25 to 102.60. In the US, the producer inflation data for July, which came in below expectations as the cost of services dropped the most in nearly 1.5 years, signalling a gradual ease in price pressures and boosting expectations for the Federal Reserve to cut rates. The producer price index, or the PPI, rose by 0.1% in July, missing the expected 0.2% increase, and increased by 2.3% year over year, down from 2.7% in June. This data lifted investors' sentiment ahead of Wednesday's Consumer Price Index, or the CPI, which is expected to rise by 0.2% month over month. And then on Thursday, we've got the US retail sales with a forecast of 0.4% increase. This week's data could prove clues on the US Federal Reserve's next move, with the markets divided by a 25 or 50 base point rate cut in September. Increased volatility is possible, intensifying market swings after last week's fluctuations. The Fed has kept its benchmark rate at 5.25 to 5.5 for a year following the 525 base point increase over 2022 and 2023. With the recent strength coming into the Australian dollar, keep an eye on this level around 40.45 as it may extend on to 66.90 where profit taking is anticipated. Traders should remain cautious and closely monitor signals and adjust their risk management strategies in case of any pullback, with support seen at 66.10 and just beneath there at 65.85. The 60-day simple moving average is a key point, as you can see right through here, as we got a bull move, a bear, and a bull move, which held relatively well until we got confirmation to the bear move. And if we see a break through 66.45, looks up towards 66.90 as mentioned, or even on to the highs of 67 cents. The euro was also relatively firm as the dollar dropped, as I mentioned, to 102.60. And with that, now challenges the 110 figure 10 area, which could extend on towards the region as viewed around 111.1545, with any pullback likely to be shallow, but support seen at 109.45.55 and a base holding relatively well at 108.70.80. Since the surge up to 148 for dollar yen, the market has wavered, and I still feel there is potential to a downturn that could see a move back to the low 146 and lower, with a broader call at 142 that was recently challenged last week. Nevertheless, with the market still wavering with these technicals, upside attempts should be limited from around 147.15.30. Turning to sterling, since the engulfing candle, we've got further strength in the market and now reaches its objective of 128.60. With this level slightly weakening as the challenge continues, we may see an extension on that leads towards 130 as an objective. I haven't been overly bearish when it comes to the pound, and monitoring the support levels as it declined is now in a prime position to take the challenge to the broader call of 131. But we've still got a few levels to tackle, so therefore traders should monitor signals closely and be prepared for any potential pullback, with the support seen minor at 128.15 and the key support now seen at 127.65. Profit taking emerges again in front of that key level around 2,480 to 2,500. Overall, though, the bulls are still likely to take the market higher into uncharted territory. So therefore, any pullback to 2,454 to 58 should find support and look for a further rise beyond 2,470 and maybe, as I mentioned, to that key level, which is seen around 2,500, and reassess from there. Traders should adjust their risk management strategies for possible whipsaw movements, and therefore any pullback, as I mentioned, should be monitored in case it offers a bullish opportunity. Wrapping up with oil, profit taking also comes into play after reaching its $78 mark. With a pullback looking towards 76, 70.80 may find a bounce and therefore look for an extension beyond $78 a barrel and up towards the region of $80.5 to $81 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report and hope you enjoy the great start to the day.